What's up, guys? It's Joe. We're back to make some dough. Um, like always, I am not your financial advisor, and this is not financial advice. But you saw the last video, you had questions. Let's get into it. I'm just going to go through these in no specific order. Uh, question was, they asked you to vote. Do you have to? What happens if you don't? Just because you have voting rights, so you own shares quarterly or semi-annually or maybe every other year, they want to make a big decision, they want new board members, whatever it is, they'll email you, or your broker will email you, be like, hey, proxy vote, please vote. You do not have to vote. You can just abstain. You can vote on, if there's 10 different votes, you can vote on half of them. You can vote on none of them. You can vote on one of them. Usually it will say like agree or disagree or abstain on it. And it will also give the suggestion of vote with the board. So board agrees or disagrees, whatever it is. But you could never open one of those up, totally fine. So no, you do not have to vote. Just like in America, you don't have to vote. It's your choice. It's your right. Next question was, how do you get the company from 4 people to lots of people? So I'm going to assume this means, how do you get listed and become a stock? You can buy on the open market, so it's complicated. But basically, you do an IPO, which is initial public offering. It's lots of paperwork. You file with the SEC to get on one of our major exchanges. There's other smaller exchanges. There's other countries' exchanges. But for us, basically, you do all this paperwork, and it's laying out all the company's dirty laundry for everybody to see, basically. If they like you enough, you get listed. It's a big thing. I'll make a video later on to get in depth about it, but it's a lengthy process to get listed, at least for on the NASDAQ or New York Stock Exchange, which is the 2 major ones in the US. Let's see. Can you buy or sell whenever? Is it certain hours? Is there a limit to how much of one stock you can buy? The US stock market does have market trading hours. It'll be your standard Eastern time hours. You can just Google it. We also have pre-market and post-market. So it depends on your broker. If you're on like Robinhood, you can see it. I think they let you trade like 2 hours post-market. So my time, if the market closes at 2 p.m., then I can put in a limit order for post-market, and that will let me trade until like 4 p.m. if it gets filled. But for the basic understanding, yeah, there is a window, and you don't need to be trading pre or post yet. But you usually can, like 30 minutes before the market, 20 minutes after. You just have to talk to your broker. Otherwise, if you're just doing a regular market order, just market hours. Monday through Friday. Holidays, it's closed. So this week's Christmas, Christmas Day will be closed. They also do half days, like day before Christmas is a half day. I think the day after Thanksgiving is a half day, I think, or a day before, something like that. So, like Thanksgiving, it will be closed. Federal holidays. Let's see. Does the total shares matter? Like the total outstanding share market, the total outstanding shares in the market. Excuse me. Not really. If you're just buying a few shares here, a few shares there, even 100 or 1,000 shares, the total outstanding shares does not matter. It just kind of tells you what percentage of the company you technically own. Most of us watching this are not going to be, 1%, much less 10% shareholders. Once you reach 10%, then it matters how much you own, because there's different paperwork you have to fill out because you own so much of the company and you're subject to trading quantities in a 90-day moving period. But you're probably not going to reach 10% of anything unless it's a penny stock, and even then it's going to be rare. But I'll make a video later on if people are interested on trading volumes when you reach 10%, and you could even take over a company if you buy enough of it. You know, there's hostile takeovers where a company comes in, buys up all the shares of another company to start taking it over. Next question was, where do you see how much a dividend is? It just says percentage. So perfect example. I listed the ones the other day. So KO was Coca-Cola, VZ was Verizon, DIS was Disney. Currently trading at $69.84, $39.96, $113.23. This is that percentage yield that person was talking about. So when it's trading at $69, you'll see that 2.9% yield underneath it on most brokers. That's telling you what the annual dividend pays. So Coca-Cola currently pays $2.04 annually. So throughout the year, they will pay that much out to each shareholder. So you take current market price, multiply it by the yield, you will get that number. Same with Verizon, 6.91% yield. They pay out annually, so yearly, $2.76. Now this could be semi-annually, so twice a year, quarterly, monthly, or just once a year. Sometimes companies also do a special dividend, so if they have like a major merger or they did really good or something like that, they can go out and say, hey, we want to give all of our shareholders $5 extra each, or whatever it is, you know? So dividends are pretty cool, in my opinion. Let's see. Ooh. How do you buy a stock? Where is it kept? Okay, so typically when you buy a stock, you go through a broker. Whether that's Fidelity, Charles Schwab, Vanguard, or Robinhood, E-Trade, you know. You go through your broker, so you'll make a brokerage account through them, connect it to your bank or write them a check so you can deposit some money in, and then you can buy and sell stocks. The stocks most things are electronic now, so you'll just see the stocks in your account, so technically it's held at your broker. Back in the day, they did physical certificates. There was a piece of paper with all the information written on it, and then your name was also on it. Maybe you got one of those as a gift at some point in time. The Disney ones were really popular back in the early 2000s, although I think they stopped doing them in 2008 for Disney at least. But it might not be 2008, but whatever. You can still get a physical certificate for some companies. It depends on the transfer agent that manages the company. But the average person is never going to see one in their lifetime or deal with it. So for you right now, at your broker, basically, you buy it through your broker, stays at your broker. That's it. You know, you can just buy and sell through them. They send you a tax form at the end of the year with your gains and losses. It's great. I'll also make a video later on if you guys want to know more about the physical certificates and how to get them if you want to give them as a gift that way. You can just give gifts through your broker now, so if your kid has an account, you can just journal it over. It's pretty easy to do now, although it does depend on the broker. Some brokers are much easier to use than others. If you want a video on what broker to choose or which one's right for you, let me know. Be more than happy to assist. I've used a lot of them, and I definitely prefer some over others. Let's see. Do you have to buy 100 shares at a time? Back in the day, yes. Now, no. So years ago, a lot of years ago, yeah, it was lots of 100. When you start trading options, everything moves in lots of 100. I'll do a video on options later to explain them. Don't worry about it. For you right now, no, you can buy one share at a time if you want at any broker. some brokers even allow you to do a partial share. So say you only have $50 in your account, and Disney's trading at, we'll just say 100. You can just use depends on the broker. Not every broker can do this. So like Robinhood does partial shares. Schwab does on certain securities. I think Fidelity does. I don't think Vanguard does. I'm not positive, don't quote me. But a lot of brokers do partial shares for at least blue chips. So you can get like half of a stock, or 0.222 of a stock, or even 0.05 of one, whatever it is. You can get partial shares at most brokers. They do not let you transfer partial shares. So when I say that, so like, yeah, you can buy like half of a share of Disney, you can sell that half. It's fine. You can buy another half and then it makes a whole, you know. If I have 1.5 shares of Disney and I transfer my account from Fidelity to Charles Schwab, the one share will transfer. That half share, they will sell me out of that share and then transfer the funds. They will not transfer half shares. Or at least not at the point when I'm making this video. To the best of my knowledge, they will not transfer shares. I've never seen it done. So you cannot gift partial shares. Also, if you have 0.99 of a stock, you do not get a voting right. You do not get the dividend. You have to own the full share to get the dividend and the voting right. Most people don't care about voting rights, but you do care about the dividend. So if Disney's at $113 and I pay $112 and pick up 0.99 of a share, I'm missing out on $1.50 a year. So you have to do the full share to get the benefits of the share. I hope that makes sense. What other questions do we have? Can you buy a stock the day before dividend and then sell it the day after? So, kind of. Dividends are announced, and then you can go on MarketBeat to look up this information when I explain the dates. OTC Markets might have it. There's a few websites. Yahoo Finance probably does. I use MarketBeat for a lot of just dividend stuff because they show you the previous dividends too. They have an X dividend date. That's what it's called, EX dividend date. So dividend will be announced, like, it will be, we'll say it's January 5th, right? They'll be like, hey, our X dividend date is going to be January 26th. X div announce, whatever. Announce dividend date, X dividend date, and the pay date is going to be February 10th. So, they'll announce, hey, we're going to give you 0.25 cents. You don't have to have the stock yet. It's January 6th, 7th, 8th, 10th, 15th. You don't own the stock yet. You need to buy the stock by January, one business day before the X date. So that's when the X date is, when they go through and they basically, like a teacher taking attendance. They take attendance that you own the stock. So they say Joe Doe owns one share of Disney right now on that X dividend date. So and they do it that morning, pre-market opens. So if this is a Friday, on Thursday, the 25th, I can buy the stock. Right? They take attendance on the 26th. I can be the bad kid and ditch class right after attendance on the 27th. I can sell. They will still pay me that dividend because they took attendance while that I had it, even though I sold it. So Same day, can you get the dividend? No, it's like a 2 to 3 day window. If you sell it on the 26th, do you still get it? I don't know. I've always just waited that extra day if I'm gonna do that, to make sure I on attendance. But yeah, buy it the 25th. Ex dividend date, so they mark me for attendance is the 26th. I can sell on the 27th. February 10th rolls around. They pay me my 25 cents. Yeah. Or you could just, buy and hold it, and then you keep getting it round and round and round. The other thing with dividends, some brokers will ask you, do you want to reinvest your dividend? Or do you just want to put in cash in the account? So, cash in the account, you'll have a balance of $0 in your cash, and then suddenly you get 25 cents in there, or $2.04, or whatever it is. Cash balance slowly goes up. You can pull that out, spend it, buy more stocks with it, do whatever. Or you can reinvest, select the reinvest option for your dividend. So you'll go from, we'll say Disney's $100, so one share of Disney, and in a year, your dividend hits, it gets reinvested, and you'll have 1.01 shares of Disney. Now, you're like, wow, that's awful. It's going to take me 100 years to get that extra share. Because it's not compounded, technically, because it's not a full share. But when you have like 100 shares, okay, so suddenly you're getting one full extra share every time, and then a little more every time, so that compounds because you're getting that full share, if that makes sense. So, give and take, if you're buying and selling a stock a lot, there's something called wash sales. We'll get into it later, but for tax purposes, if you select reinvest, and you sell it and rebuy it, it affects your long-term holds and gains. It can incur a wash sale, which I will explain in a later video because I am not a tax advisor. So I can just suggest tax stuff, but not perfectly explain it. But it can cause you some problems on taxes. But that's only if you're buying and selling the same security in a short window, and that reinvestment hits right before. But yeah, probably relevant for you. Don't really worry about it. Also, if you get below like $6, they're not even gonna. If you make less than $6 in dividend from your investments, I don't believe you report it. I don't think they even print you off a W-2. Not W-2, whatever that tax form is. Yeah, I'm not a tax person, guys. Sorry. I just invest and deal with investments. But yeah, hope that answers your questions. If you had more, I might include it in my next video, or I'll just respond to your comments. You can message me on Instagram, Joe's Dough IME. So Joe's Dough Investments Made Easy. Just like this, except for Instagram's IME. Make some money, guys. Have a great holiday and New Year. Let me know if you want more of this content, or you want something else explained, or what's going on. Please like and subscribe. It helps me out a lot. I'm trying to build the channel, trying to gain traction. But yeah, have a good one, guys. Make some dough. Don't forget Joe. Bye.